This is Next Steps for Seniors with your host, Wendy Jones. Each week, Wendy brings resources and information to help guide you through those next steps with elderly parents and loved ones. You can follow, subscribe, and share on your favorite podcast platform. If you have questions or topic suggestions for Wendy, you can call us at 248-651-5010 or email at hello@nextstepsforseniors.com.
Hello and welcome back to Next Steps for Seniors, Conversations on Aging. We are blessed to have Merrick the Fourth. Let me just add, I'm sure there's a story behind that.
There is. So funny enough, Merrick the Third, my father, also in the insurance agency industry as well. We do have separate agencies, but definitely one of my biggest mentors in the industry, and has made it easy to kind of come in, at a very young age and go from there. So shout out to Merrick the Third.
There you go. That's awesome. I love father and son relationships. That's pretty cool. So I want to move into life insurance a little bit, and my thought process on this is, as we're working, usually we get some type of life insurance policy while we're working. And a lot of people, when they retire, they're like, I'm good. I had my life insurance policy that was, given to me, whatever, while you're working. And then you just don't have life insurance anymore. And you're moving on through life. And all of a sudden it's like, oh, I probably should have got life insurance.
Totally.
So talk to me. What do you recommend when it comes to seniors? Many think, hey, I don't need it.
Well, truthfully, you always, see, okay, we have it through work. That's great. While you're working, a lot of the times that's, a couple times salary. What people don't understand too with the work policies is that, when you leave, that doesn't always necessarily follow you. Most of the time it doesn't. So then you end up in a space where you don't have, any life insurance, which is such an important, part of your, financial planning goals. So, I see, people, when they retire, they think, okay, well, I know it's based off age or premiums. Well, I'm too old to get it now.
It's going to be too expensive.
It's going to be too expensive.
Right.
But, there's cheaper options to be able to get, insurance for, whatever you want, and that you can still get, term insurance, which will be to a certain age or whatever. And then getting simply a small final expense policy is always great for seniors as well, knowing I'm not going to have to leave a burden, whatever it is, burial expenses.
Okay, talk to us about the final expense policy.
Yeah.
Do you do that also?
I do.
Okay.
So we don't necessarily call them final expense policies, but
it sounded good.
But we have, our minimum on whole life insurance is $25,000. And that acts as a perfect final expense policy because truthfully nowadays you can't have a funeral for more than $20,000 to $25,000. Even on the $15,000 side, well, at least you're leaving a little extra for certain things. They're already going through the, passing of a loved one. And then also, with seniors, I think single premium whole life is not something that's talked about enough. People think, okay, I'm going to pay this monthly premium or yearly premium to have life insurance. Okay, this is great. Well, we offer something called a single premium whole life, where if you have leave away money that you're going to leave on to your grandchildren, leave on to your adult children, well, take that lump sum of money and put it into a single premium whole life, and that is going to grow a cash value from that money. And also, that amount of money that you put in there plus the cash value will be tax-free to your beneficiaries.
Keyword tax-free.
Keyword tax-free. So, perfect example, I have $50,000 that I know, I worked for it. I don't really need it. My expenses are low. I'm going to give this to my kids. Well, when you give that to your kids, it's not only going to have to go through probate, through the court process, but it's also going to be taxed.
Mm-hmm.
It's, Uncle Sam's always going to get his hands on something.
Mm-hmm.
So when going into a life insurance, single premium, you get rid of that tax. It's a tax deferred financial type of choice. So, you see a lot of people put money in CDs or put money, in 401ks and things like that. But the one thing with the single premium life is that not only is it creating a modest cash value while it's in there, it's working, it's also going to be tax-free to your beneficiaries.
Is there a limit you can put in there?
There is no limit. So I'm sure when it gets into the, tens of millions and things like that, there may be limits when it comes to,
believe.
That's a completely different story.
I don't think we're talking about that today.
For your everyday run-of-the-mill, it could be anything from $25,000, 1,000, or, 10,000 to 1,000,000, and, on and so forth. So I think it's a really good thing that, people, I don't think necessarily talked about enough. I think there may be a reason it's not talked about enough because, you do get those tax deferments. So, I think that's a great thing for, that leave on money.
So let me ask you, and I'm not going to hold you to the price, okay? But can you give us an idea, like how much a life insurance policy would be for like someone who's already retired? So let's say a 70-year-old.
Yeah. So
somewhat healthy, right? No big issues. I mean, and does that matter? Let me just say that too.
So it does. Health does matter. So you are going to go through a medical exam whenever you get life insurance done, and that's just so that the insurance company can say, okay, other people that were in your space, this is kind of, what, when they passed away, whatever it would be. So, obviously it's going to be more based off the age on the premium, unfortunately, but, price-wise, it would be very tough. But for example, in the 60-year-old range, no tobacco standard rating, so you're healthy, you don't smoke or anything like that, I would say it would be around $300 a month for about $250,000 worth of coverage in term insurance. When it comes to whole life, it is going to be more expensive, probably $1,000 a month or whatever it would be. And again, don't hold me to that.
No.
But I think it would be in that
just
ballpark
we need a range.
for sure.
Yeah.
And my thing is too is, you are paying into that, but whole life is creating a cash value. So you 5 years down the line, you've created a cash value of XYZ. If you want to take that out and go put a down payment on a house or do whatever, you have the ability to do that.
And if not, when you pass away, that money is there for your family.
Beneficiaries. So whoever you have named, will receive a check for that amount of money. And that's what's so nice about life insurance is when you say, I want $250,000 for when my family passes away, the day they pass away, they're getting $250,000.
It happens that fast.
I don't know if it's the day of, but my point is when it happens, it will be that amount. Yes, it's not going to be 237 or 238. It's going to be 250.
But it's not going to be like a year later. I mean, because okay. No. Probate, just FYI, takes about a year for everybody in case you don't know that.
Yes.
So when you do have the extra funds, and I liked your final expense insurance or whatever you want to call it, because it is expensive to have a funeral now. Do you know how many people have called? And I want to add this really quick. The military, if you're a veteran, you actually get a free funeral. So just FYI, anyone listening to the program, that's a big plus. You served our country. You deserve it. You got to go to a certain place, but they do the whole flag and the firing of the guns and everything, and it's incredible. So, but I like what you're talking about. Let me ask you one more thing, because I think a lot of contractors for hire come into seniors' homes to do things. Can you talk to us a little bit about what happens if something happens to them?
Yes. So
while they're at your house?
This is obviously a huge thing because, obviously as, we get into life, we, have more people kind of come in and do things for us. Bigger projects in the home, redoing a kitchen, whatever that may be, laying brick outside.
Right.
You're going to bring in contractors and, most of the time those people are great, but it's the times where, they did something wrong. somebody got hurt on the job, whatever it is. Fell off a ladder. So that's why it's always good to have your home liability coverages intact to, cover anything that were to happen there. But you do want to make sure that any contractors you're having come in have a certificate of insurance, that they're properly insured. No contractor should have any problem providing that. So anytime, like I said, that kitchen is getting redone and they're using a bunch of power tools, well, it'd be very good to make sure that they're properly insured. If a guy gets hurt on the job, that should be on the contractor, not you. So it's just making sure that, I deal with a lot of business insurance and contractors as well. And it's simple. All of them should have, general liability, workers' compensation, and things like that when they're working on, inside people's homes. So that's just something to look for that, if you're bringing in people to do work on your home, just make sure that they're properly insured.
And that's a normal practice to ask for that, correct?
100%.
Because, hey, can you just show me your certificate of insurance?
You're working in my home, you're another business, it's liability. I have every right.
Well, and I want to add, because this happens, if there's the guy next door who says, oh, I'll just do that for you for cash, okay, who's covering it?
So that's where it, truthfully does get a little sticky, because now you do have, that neighbor, unless he does own a contracting type of business
and
or
a certificate of insurance.
carpentry business or something like that, he's not going to be insured.
No.
So you do truthfully got to be careful with that. Might not be a bad idea to be watching the whole time, or just simply, hire a hired professional. But, obviously I know that stuff happens, even, an uncle coming over to do it or whatever it would be, adult children.
But still the homeowners would cover that.
The homeowners would cover that in the event of, them suing due to being hurt at your home.
And when do you need a umbrella policy? Like if you have a pool?
So umbrella policy, people link to things like that. Oh, I have a pool, I have a trampoline, I should have an umbrella policy. But that goes back to what we talked about in the beginning of the show, is that with your liability coverage, an umbrella is just extending your liability coverage. So when I talk to, you're worth $2.5 million on your assets, well, that means that your liability coverage should reflect $2.5 million. And in order to do that, because on the homeowners and auto policies, it only goes up to $1 million, you get this additional coverage with the umbrella, which is huge. Again, very cost effective for us. I see on a normal home and auto, it's usually about $215 for the whole year for an umbrella. Mm-hmm. So I think it's a huge thing to,
look at and definitely research. Okay. Well, I am going to give you, grab your pen and paper. I want to give you Merrick's phone number. It is 586-371-2055. You're listening to Next Steps for Seniors, Conversations on Aging. Be sure to reach out to Merrick Maris IV. Thank you for tuning in to Next Steps for Seniors. Our podcast drops twice a week, Tuesdays and Fridays at 7 a.m. Find us on your favorite podcast platform and be sure to subscribe so you never miss an episode. To learn more about Next Steps for Seniors, visit us at nextsteps4seniors.com.